In this video, I'm going to talk about how to mark your most recent swing highs and swing lows and how to mark them and how to change them. Okay, so first of all, why the need for marking your swing highs and swing lows? So it is the definition of a trend that for a trend, you have to see a new high and a new lower high. And when you have a series of higher highs and higher lows, let's go to a chart where this recently happened. So if you look at this chart, US 30 hourly chart, around this point, this low and this low and this high, these highs were kind of similar. So we can mark them like so. So this cannot be called a trend, because this is the opposite of trend. This is a trading range where you have a series of highs and series of lows. So we have one most recent low here, and then inside we have these levels going on. Once it breaks this trading range, at the end of this candle, you will have a new swing high. And that is how you mark your new swing high. So as it keeps going, you keep considering that as the high. And this is also higher than that, as we can see, a little poking out. And then we have a new high, and then we have a new high, and then we have a new high, and then we have a new high. And now we don't have a new high until this point. So where do we start? Okay, so we have to start somewhere. Let's suppose we were here, and this was our swing high. At that point, bring it to the middle, this was our most recent swing low. And now I'm going to show you how you can assess that now we have a new high, a new low in this case, and based on that, you will create or you will modify what was your previous low. So before this level, actually our most recent high was over here. Let's mark that. Price comes down. This is our new low because it has broken levels to the left. It has broken this level. At this point, this was low, and this was a new low, and this was a new low, and this was a new low. And when the price goes up, we still consider that as our swing high. When will we move that? That is the rule. So we will move, this is the rule that I'm going to talk about. We will consider this as a swing high only when this candle goes and breaks this low. So let's mark this as our low of that time. As soon as this breaks, now this is our new low, and because it has broken the previous low, now we will look back and see where is our previous high within the series of lower lows and lower highs. So we'll move this line to over that. So when this candle was printed, we will move that to the low of this candle. Then after the next candle, we will move it further down to the low of this candle. Now watch this candle. This candle has broken the high. So technically, it is a minor swing high. But I will not do it on one or two candles of swing like this. And this will not be considered a high until the end of this candle anyway. So if we were to follow the rule of if at least one candle has broken the previous, then this would become our swing high. But this is not our swing high. This is a minor pullback. We need to see a swing. Like this will be considered. So at the end of this candle, we have a new low. And when we look back, what is our major swing high? It's still that. So then this price goes up. And if we had considered this as the high, suppose we become extremely objective about it, and because it's broken one candle high, and this is our minor swing high, then we would say, okay, now it's broken, so we will take it to over there. But I will keep it to that major level. Let's suppose we move it there. Then what happens on the next candle? This candle breaks further low, so we will bring it here. And when we look back, our level is the same. And the next candle breaks, we move it further down. We look back, our swing is still that one. And then this candle happens, it's broken nothing, so these two are our levels. then this candle breaks this high, so we will move it to that high, but when we look back, our major swing low is still that because it's not been broken. A level is only changed when it's broken. So after this, it comes to over that candle, and then finally it goes back up there. And when we look back, no candle has broken the low, so we still have this as a swing low. So this is a major swing high and low. At this point, I will consider this as my two major highs and one low. So this is my resistance now. Why? Because we have two touches of it. So I will give more importance to this. This one is now a tentative support because it has not been retested twice. And then when price starts to come down, it has not broken what we consider as our previous low, so we will not mark anything. And then it keeps going up and down, up and down. It has not touched any of our major swing high and low, so we will keep those levels there. And in doing so, you will automatically filter any signals and trades that are within a trading range. So in doing so, you have automatically learned how to identify trading ranges. Then it comes to it one more time, and now it has given you 3 touches, so the resistance has become even stronger. And this candle is very big impulse candle, so that means that a lot of selling happened over there, but it did not break any low over here until finally at this point it breaks the high. So it's broken an important resistance point which was touched 3 times, so it has more value. And now if you see, going slightly off the topic to support and resistance, but it's relevant. If you look at it, price strongly comes down, but those buyers over here actually took charge and took the price up. So let's come back to moving the levels. So at the end of this candle, we'll move the level up there. And now when we look back, what is our major or even a minor swing low before there? Because now it's broken, so we are going to consider, we're going to look back and we will see which candle has broken the sequence. So this candle has broken the low of this, so we will move this to this low. Now, if you're pedantic about it, you can still leave it there, or you can keep a mark of a major swing low there. But now since it's broken above and we have a new high, we're not too worried about these levels. Why? Because this is for our stop loss or considering where is our major swing low. We are more interested in looking at the highs now because it's broken, it's created a new high and it's going up. So at the end of this candle, we'll move it up there. The next candle also breaks it, so we'll move it there. The next candle also break the high, so we'll move it up there. And every time it breaks a new high, we will look back and see which one is our new swing low. It's still the same. Now, at the end of this candle, when it comes down, it has potentially created a pullback, creating a new a minor swing low. So now, when the next candle breaks the high, we can consider this as our swing low. So we'll move it to the low of this. This black candle then breaks the high. We move it up. We look to the left, and this is our main low. So we leave it there at this level. At the end of this candle, or this candle, nothing's happened. No low or high has been challenged. So we will leave it the way it is, and we move it up there. So around here, one can argue that this candle can be considered as the low because it's broken the low. But this is where the art of trading comes in. So I will continue to keep this as my low because this is just a small pause. It's still not broken even the low of this candle. It's still, this candle is kind of engulfing this. So I'll leave it there. Otherwise, if you want, you can move it to up there. At the end of this candle, we move it up there, and then we look back. Again, this becomes our level. Just for the sake of it, let's suppose we change the level here. And why I'm changing this, I will talk about this later because it is for stop loss management as well. So it's a bit like if you follow the AIMS box. So with every new AIMS box and new AIMS box low, you trail your stop loss. So now keep looking. We are here, and at the end of that candle, we move it up there. We look to the left. This is still our low. Then it comes down. does not break this low, so we keep it the way it is. And at the end of this candle, we move it up. And now when we look back, this is our low because it is the low of a pullback. So we can move that up. So now it's literally become an AIMS box. And it keeps going up. At the end of this candle, we look back, the same level. At the end of this candle, it's broken the high, so still the same level. This candle has not done anything, but it has given us a seed signal. It goes up, we move it further up. At the end of this candle, we move it here. And when we look back, this candle has broken the low of this. So if you want and you want to be strict about it, you can bring it here, but I will still keep it there because this looks a little bit more major than this. This is just a tiny move. So we move it further up. At the end of this candle, again, ignoring this, I will use this one. Then at the end of this and the black one, we will still keep this one as the low. And now, when this new high is created, and I look back, I can see that this has broken the previous low considerably, so I can now move this up there. Now, I can keep going on, and actually I'll just finish this. So if you can see, it should be up there, and it has not broken any of our lows. Actually, at the end of this candle, this will be our low. So I'll move it to there. So now, as you can see today, when we're looking at it, we will not be taking any signals over here because we do not have a high. So this whole exercise is for that rule that will allow us to pick very high probability trades. And that is, we want to only take trades, we want to take banana signals only when we have new higher highs and new lower lows based on this concept. So doing this on the 1 minute chart, I just eye it. I don't move the lines and stuff because we don't have time. But on the hourly chart or on the daily chart, you can leave those lines and keep updating it at the end of every candle. So if you look at this candle, when it ends, I will see what happens. So if suppose this candle comes all the way here, okay, let's suppose it comes all the way down there. If it does, then I will move this to over here, and then I will look back, what's the higher high? So it's not this one because this candle has not broken the high of that, so we will leave it there. And that's how it's done. And the beauty of this is that if the market goes into a trading range, like it did over here, you will automatically eliminate all your signals. And let me now take you to the DAX M1 chart today. Ooh, it's moving. Okay, so mid-video I realized that I was waiting here for the US news, CPI news, and that when news comes, the market moves, and when it moves really nicely and clean, we have signals on it. As you can see on the pound dollar, we have the dot signal, which we call the waltz pattern. If you went short on this, your stop loss is 6, and you have your 18 stop loss target point hit really nicely. So let's go back to our example of the swing highs and lows, which I have refreshed, I think. So I will take you to now the M1 chart. So this is the news time, and so when the market came all the way down here, your new low will be this. And as the market goes up, your previous high is still over there. So actually when it breaks over here, this is the previous, you can consider that as a high but not marked. For now, it goes up, it comes down, does not challenge that level, so your level still stays up there. Let me correct myself in here, because this candle has broken both the lows and the high. So once it broke this low, at the end of it, when you look back, the high of this was your new high. It is minor, so you have a choice whether you want to take it or not, whether you want to change this level or not, or you want to leave it up there. So in this example, I will use this as my new high, because that's a minor swing high. And then when this candle breaks the high, we will move it to up there. And then when we look back, this is our swing low on this, because it has broken the low of the previous candle. So then I can move this over here. But if you follow this technique, you will have one advantage where you will make the inner trading range, you will be able to mark it, where the disadvantage is that you will probably ignore the major swing highs and lows, but that's okay. So at the end of this candle, we move it up there, look to the left. This is our candle low, it would stay there. At the end of this candle, we look to the left, and this candle has also broken the low of this, so we can then move it up there. So that's your level. Some candles can do that. And then when this candle broke the low, we'll move the swing low to this, and when we look back, this is our highest high, so we leave it there. At the end of this candle, there's a new low, we look to the left, the same level stays, and at the end of this candle, it has not broken any highs and lows, so we leave it there. At the end of this candle, it has broken it has created a new low, and we look back, this is our new high, so we'll move that to over there, right? And then at the end of this candle, we will move it further down, and then when we look back, our high is up there. So if we go for only one candle breaks, then we create very tight swing highs and lows. In my case, in this case, I will leave my high up there at certain point, and then when price comes down here, I will move it to this swing high, and then I will leave this one over here. Now, as we can see, this candle is breaking the lows, and at the end of this candle, we will move it to the previous lows. So I will also pay attention to my major swing lows and minor swing lows. So we want to ignore the minor swing lows and highs and don't change them. So for example, when I'm doing this practice, I will not move the high to over there, so it will stay up there. And so low will still be this. And since it has not broken any of the high, it has not broken that, so I will leave this low over here. And so I will avoid any of the signals in this region. And now when the market is breaking and it creates a new low is when I will move this over here. So let's wait for this for 20 seconds. And in 20 seconds, we will find out. We already know that the low has been broken. So even if the candle goes up, we know that the low has been broken. It has not comprehensively been broken because I would consider a low to be broken when candles breaks below it, but that's besides this. For the purpose of this video, we have now a new low. If you pay attention to this, we have a low. So it's when the rule is that if I am creating a new low, I have to look back and see where my swing high is. There's my swing high. It's pretty prominent. It's not just one or two candles. It's pretty good. So we have a box high there, and this could be our box low. So because I have a new low, I can wait for the candle to come back. We have everything. The dash line is below the solid line, and the dash line and the solid line of the 5-minute chart are also open because of this trend. So we are ready if it gives us a signal. Although in practice, I will not take this signal even now because I consider this to be my support. So I would rather want the price to break below this and then pulls back and retest this. But if you exercise this marking the swing highs and lows for your hourly charts, for example, if I go to the actually let's go to euro dollar, then it would allow you to actually stay away from this type of markets. So for example, just by looking at it right now, if I were to adjust my levels, I would see this candle is the lowest low, so I will move this over here, and when I look back, I have either this available or this one. I will choose this one because this is just one candle, and I will move my high up there. So now if it pulls back because it's broken previous lows, we could have a signal on this, and that's how I mark my swing highs and swing lows and move them. Now before I finish the video, actually I will address this in the next video, how you can use this to actually take trades and then trail your stop loss. Okay, so yesterday video I left recording over here. We had these candles. So let's update those levels. Let's suppose this is where my last level was, and my previous level was most probably this, or I would use more prominent one to keep it more objective. you would use this one because this candle has broken the high. So once you have this new low, you look backwards from this candle backwards, and if the candle has broken a high, that's your high, but it's too close to this, so I will use that. And so then market turns around, breaks that level. As soon as it breaks that level and closes here, our new high is up there. Let me just change its colors so it's more relevant. We call, because this is a higher one, so we'll color that blue. And the lower one, we'll color that as a red. So we know which one is which. And so when you move that over there, you will look to the left and you find out that this is the lowest low, so we'll leave it there. And then after that, it's that candle. We look to the left, the low is still that. And now if you look at it, the market then came all the way down, and as it was going down, it has not broken the low over here. So as long as it has not broken the low, this high will be kept over there and the low will be kept over here. When things like this happen, you automatically start marking your levels, and if the price stays inside your levels, you don't want to trade until there's a particularly clear move, like for example over here. So now let's keep looking at every candle, pretend that we are looking at it, and over here, so when you come to this candle, there's no new low, there's no new high, so we leave it as it is, same, until finally, today, this morning, it breaks the low. So as soon as it breaks the low and candle closes, I move the low to the red line to the low of this candle. And then when I look back, then I have this candle, which has broken the high. So again, as you can see, it's a very minor, a very small kind of move, and both of the candles are inside the candles of this. So I will not particularly use this at my swing high, but if I was in a trade, for example, I was short from here, then I would definitely use that to move my stop loss, which is the topic of the next video. So let's use for this purpose, let's be very strict on this and very objective, and that of course is up to you when you want to apply this technique. Do you want to allow yourself to visually see the levels and then decide, or do you want to be absolutely objective? I know people like Emma, they will most probably stick with the most objective way, and that's the way forward. So that's your new high, this is your new low, and as price keeps going, we are not doing anything until this blue line is violated or the red one. Over here, the blue line has been violated, we have created a new high, and when the new high is created, we look to the left, no candles have broken the previous low. So basically, as we know, the definition of a pullback in any trend is that a candle must break the low of the previous candle. So in this case, no lows have been broken, so the red line will stay over there. At the end of the next candle, which was just an hour ago, we move it up there, and when we look back, the same candle has broken the low. So technically, you can move this over here. So what do we have now? Well, we have new high and a new low. Now in this case, for myself, for the purpose of this technique, you can just keep it over here. So the same candle can do that. And then you can pay attention to this level as your swing low. So this is your minor swing low and a minor swing high, whereas this is your major swing high and a major swing low. So then other people whom have taught me this technique also have two blue lines and two red lines. So let's color this blue and make it fat. And by the way, if any object in MT4 is selected like this one, and then you click on it with Control key for PC, press Control key and drag, it copies it. So there's another trick for you. So let's change the properties of this, just for the purpose of this video. It's red. So then you can do something like so. Now, if you use the TradingView platform, it has what's called array. So array is something like this. It starts from where you want to drag it and then it goes sideways. The MT4 one is also good, but it's kind of fiddly. And make sure you, when you want to drag it, to use the middle dot. But because if you drag from here, it's going to change it. It's going to do something like this, which is good for trend lines, but not for the purpose of this. Sometimes if you're using the trackpad or your mouse is not sensitive enough, you will never get a straight line on this. There will always be this little dash. That's because we're using a primitive software that still works, MT4. So anyway, and then what they would do is that they would mark their levels using this. So that's what you can do on TradingView. Let's delete that for now. So if you want to mark major and minor swing highs and lows, then your technique would be that wherever is your major highest high and lowest low on your chart, let's zoom out a bit, you can see that this literally is your highest high for all of this chart to the left. 1, 2, 3, 4, 5, 6 days, and that's enough for us. And this is your new major low. And then inside you have a minor high and a minor low. Now, since we have a new low on this chart, not necessarily all the way to the back, but from here you have an impulse move, and then you have a correction, which is followed by this confirmation bear candle, and it also is a minor low. We can use this as an entry signal, but our stop loss is going to be too wide. So for that reason, we are not going to use it. But if you want to, you can take a breakout of this candle with, say, 15 stop loss. There's a higher chance of it pulling back and hitting that. But if it's successful, then you can use the technique that I'm going to show in the next video, how to trail your trades on the hourly chart for almost indefinite trails, like you will not have target points. Having said that, if you take a 15 stop loss and have a 45 target point, which is 1:3, it would work. Because even if you have 25 to 30% win rate with this method, with the asymmetric risk reward method, which is 1:3 to 1:5 or more, eventually you will always be on the right side. The account will continue to grow. So that's another addition to this video, and I hope to see you in the next video. Okay, so big difference between these two signals. One is over here, the other one's here. The first thing to explain is why I took the signal, and that is rule number 1. Is there impulse wave, and is the impulse wave a breakout? So sometimes there is an impulse move, like for example this one, but it's inside a trading range. So you need to know, what is your trading range? You need at least 2 highs and 2 lows. That's my first high and that's my second high. So that's 2 swing highs. That's the low, and then it is matched by a second low here, so that becomes a trading range. So anything here is going to be dangerous. Then it comes back up, gives it another touch, that's the 4th touch, and then it breaks out with strong momentum. So let's zoom out a little bit more. If you look at it, then the overall swing low is over here. Let's mark that. Okay, I have this menu stuck over there, so I can't access my... There you go. So now we have this level established from there. So if you look at this, it is a range now for this level, but this was a potential swing low, not a trading range, because this was the low of this move. But inside it, we created a trading range, which was challenged over here, but rejected and went up. And then there was an impulse move that broke out of this trading range, or let's say this low. We can mark this as well. It comes back to it, retests those levels, and pauses at this level. So I went short at the close of this candle. I took a risk of 5 points with a complete 3% position. Why? Because my previous trade was a winner, and the one before it as well. So I went for the higher risk because I had accumulated plenty of profit. So there you go. That's my trade. It comes down. I can see that it was hitting that level, but it went slightly below it. And there the buy algorithm kicked in again, and it became a wide trading range. Support kind of held it. So I had brought my stop loss to 4R, and I got stopped out for 20. I could have taken 30. Well, let's say realistically I could have taken 5R, which would be 15%. So that is a 12% trade. Easy peasy. Lemon squeezy.